your commodities market update now. We see the oil prices seem to be rising this morning. We see Brent rose by 50 cents to $83.17 per barrel, while U.S. West Texas Intermediate crude, that also rose 50 cents a pair there, and that's up about 0.7%. That's trading at $77.91 per barrel this morning. Let's talk to Dr. Desola Simoni now, analyst, financial derivatives company. Great to have you. Good morning.
Good morning, Laddie. Thank you for having me on the show.
Yeah, so obviously we all want to see oil prices, continue that downward trend. But now we're seeing Goldman Sachs predicting $100 per barrel this year. How are you seeing it?
Thank you for that question, Laddie. At the moment, like you said, oil prices has been quite volatile this week. By the moment, the key factor driving oil prices are larger than expected build-up in U.S. crude stockpiles. We expected that crude stockpiles were going to contract by around 2.2 million barrels a day last week. However, it expanded by around 14.9 million barrels, according to data from American Petroleum Institute. So usually the crude stockpiles are an indicator of demand-supply mismatch in the U.S. When we see huge build-up in crude stockpiles like this, it's an indicator of softer demand amid a huge supply. But supporting prices have been renewed optimism about global growth, particularly coming from because of China's reopening. However, it's not yet pushing prices as high as it could, probably because of one, China is still having a health crisis of mass spread of COVID-19 virus, with many hospitals being overwhelmed by cases of COVID-19. However, we are seeing some pickup in economic activity in China, and we expect that if that picks up quite significantly, it's going to push oil prices upward. And this is particularly important because China, like I said, is the largest importer of oil globally, and it's also the largest importer and second largest user of oil globally. We're also seeing a softer US dollar, which is making the dollar-denominated commodity cheaper to holders of other currencies. So, and that is why that's part of what is supporting prices. So I think also it's a little bit too early to say whether oil prices will reach $100 per barrel this year. I think that's a bit optimistic, and hopefully we hope oil prices reaches that level for oil exporters like Nigeria. But I think the key factor is one softening of I think pausing the hike in monetary policy would support that, as well as more economic activity, opening up of the Chinese economy. I think those are two key factors that would likely push oil prices upward going forward. Yeah,
obviously China a big mover in that market, but it looks like obviously we saw a lot of companies take advantage of these oil prices. Companies like Aramco and BP Shell, they all did well in 2022. But it looks like Angola did take advantage. The economy grew by about 3.1%.
Yeah, indeed, Angola really expected the relatively high oil price environments by three main dimensions, or four main dimensions. One, Angola's oil production stabilized last year at around 1.2 million barrels a day. If you look at data from OPEC, Angola's oil production for Q1 averaged about 1.2 million barrels, Q2 1.2 million barrels, Q3 was also around 1.2 million barrels. So they were able to produce more. In addition to that, Angola significantly increased their exports of oil and overtook Nigeria as the largest oil producer in Africa as at May 2022. In addition to that, the Angolan currency, the Angolan kwanza, strengthened about 10% against the US dollar last year to close the year at around 505 kwanza to the US dollar. And all of this simply softened the impact of the higher price environment, or it softened the impact of imported inflation on the domestic economy. We also saw the debt to GDP ratio also a decline in Angola. So all of these factors made Angola really take advantage of the oil price, higher oil price environment. If you compare that to, and also Angola's inflation trended downwards, it was like a demand curve from I think it closed the year December at around 13 or 12%. Compare that to Nigeria, we saw almost the opposite. We saw for Nigeria's oil production almost declined steadily across the quarters. For Q1, it was around 1.3 million barrels a day. For Q2, it had declined to 1.2. By Q3 and Q4, we are talking about 1 million barrels per day. Some months, it was even less than a million barrels per day. Obviously, there are many factors responsible for this. One was vandalization of oil infrastructure. We also saw oil theft, little or lack of investment in oil sector. All of these factors contributed to lower oil exports. And also because of the currency issues and also subsidy Nigerian importing PMS, all of these factors meant that Nigeria could not really take advantage of the relatively high oil price environment.
And talking about, oil prices trending up at this time, we're also seeing LNG price. That's also, inching up. So it looks like, most of these commodities are starting to resurrect, at this time. Is that a sign of things to come?
Not really. I mean, oil LNG prices going up in Europe is mainly because of our forecast of colder of more cold next week. But before that, we've seen oil LNG prices in Europe actually trend downwards for two main reasons. One, we saw a bigger than expected or bigger than normal build up in LNG stockpiles across Europe. For this time of the year, LNG stockpiles are significantly above the 5-year average. And that was mainly due to lower demand because of warmer than expected winter. Like for the past 3 weeks, we've been enjoying a warm winter in Europe. As I speak to you, Ladi, the weather is around 11 degrees. You could go out I could go out like this and I would not freeze over. Wow. But there are now forecasts of really cold weather coming on next week. I mean, in the UK, the weather temperature is expected to decline to as low as -5 degrees Celsius. So because of that, there's more demand for LNG, and that is why we are seeing LNG prices in Europe trend upwards at this time.
And obviously, we're all looking forward to CPI data, coming from the U.S. All eyes on that data. And obviously, risk asset investors are looking out for that. We're seeing, a big rally in U.S. equities and also the crypto market there also rallying. But is it going to play out the same way we saw it last year? The data comes out, then all these markets go plunging again.
Usually the US CPI is one of the most watched economic data in the world because it dictates the pace of monetary policy in the US. So at the moment, the expectations that US inflation will slow to around 6.5%, coming from 7.1% in November. And if this expectation materializes, I think it is positive because at the moment there's a little bit of confusion about the direction of monetary policy in the US. On the one hand, so market watchers expect that monetary policy rate will peak at around 4.9% in 2023, with smaller increases around 0.5 increases and around 0.25 increases towards the end of the year, and it will hold still at that level. But there are other officials of the US Fed coming out to say that they see inflation, they see interest rate top 5% to around 5.25%. So there's a little bit of confusion here and there about the direction of monetary policy. But I think if this inflation expectation of around 6.5% materializes, first of all, it will mean that inflation has decelerated for 6 consecutive months, which is positive. It will also strengthen like the doves in the US Fed it may also give the US Fed more incentive to maybe hike prices at a hike interest rate at a slower pace, or even hold interest rates in the meantime. So I think that's positive, and that also has effects on global stock markets. Obviously, if inflation comes in at 6.5%, it may bring we may return to the bull market. We may see some risk on sentiment in the global markets. We may see the stock market also rally. It will also be positive for the commodities market because we see a softer dollar, and which will boost demand for dollar-denominated commodities.
And if the CPI comes out hotter than expected, I guess we know what to expect with the market.
Indeed.
All right, thank you so much, Dr. Desola Simoni, analyst, financial derivatives company. It was great having you. I'll be looking out for that CPI data later out today.